Hello, I'd like to give some details and explain how to write up your business plan part two. Now, the operations part start with capital expenditure. Now, if you don't know what is capital expenditure, please refer to our textbook and read about the capital expenditure. Now, in your business plan part two, you have to break down your capital expenditures into the components and give the references for your figures. Now, where do you find these figures? It's the market price. So usually if you're, for example, if you're to look for a rental price, for example, or you're going to buy some asset, like physical asset, like building, for example, or land, then Krisha is going to be the first source to look for. So when we say give references, it doesn't necessarily mean that you have to only rely on academic sources. No. If you're looking for some real data, for some real figures, usually these are the websites that are commonly used, like Krisha, like Headhunter, like OLX even, and so on. So you can actually rely on these particular websites. Now, the next thing is going to be the fixed costs and variable costs. Make sure that you do know the difference. That was one of the frequently missed questions. So make sure that you absolutely know what's the difference between them. It's an operating expenditure. It occurs periodically. Give your fixed and variable costs per month, and obviously make sure that you do give the references and justify your figures. Describe your operational stages and processes in detail means in detail. Do not let it be very generic, okay? So it's your business. That's why you have to give some details and use your case, use your business idea, okay? So please do not give very generic, very general answers. In this case, you have to be like a bit more specific and describe your business in particular. Now, if you're manufacturing, then you have to provide the method of technology. If you do remember, there were different methods of production, like flow production, like batch production, and just lay that out, okay? Quality control or assurance or TQM. Do not put all of them at once. It doesn't make sense. You have to choose one out of three and then explain why. Now, in business, you have to explain why all the time. And if you do notice, in our questions, we always ask you explain why, justify, and so on. So please make sure that it makes sense, and you have to justify your choice, giving some references, giving some data, which makes sense and which is logical, okay? Show your potential operational waste. If you do remember, there was some wastes. Look at the list of potential wastes. Try to find out possible potential wastes in your business, list them, describe them, and you have to suggest ways to reduce them or minimize them. Okay. Now the next part is finances. This is the largest and the most important part in this particular case, in this particular part. So I would suggest that the whole team actually looks carefully at this particular finance part. Historically, quite a lot of students, they messed out with this particular part. Now, the starting question is very simple. It's very straightforward. Just state what's your source of financing. Okay? Is it your own capital? Is it your own savings? Are you going to take some loan? If you're going to say take some loan, you have to explain why bank will give you that loan. If you're asking for 10 million, for example, then there should be a very good reason for the bank to give you that 10 million. And then if you do remember, banks usually ask for collateral. And especially if it's a private limited company, if you do remember, the liabilities are limited. They're not unlimited, they're limited. In this case, banks want to make sure that they do have a security and they do have a collateral. And also you have to suggest on the type of running the company. Is it going to be private, public, or sole trader? You have to justify your answer. Now the next part is the trickiest part, I would suggest. Here students they do mess up usually on forecasting. So I think you can relatively easily lay out the sales revenue, for example, by suggesting the number of units and multiplying it by your price. And by the way, you have to make sure that you do justify your price. You actually did it in the part one, the method of your pricing, but if you didn't do it in part one, in this case, still you have to explain why this particular price, why this average price for your services or products. And then you have to explain why you will be able to sell this amount of products or services in a year. Now, if you do remember, there was a question about the market growth data in part one. Now, let's say that you have found out that it's 5% on average. Now, this is average data. Now, how to forecast for the next year? You're going to use this particular data. You're going to use this 5%. Now, forecasting is not easy. You can't know the future. Well, no one does, in fact. So what we can do as best, we can actually rely on historical data, on the past experience, and extrapolate that into the future and say that, well, historically, it used to be 5% on average, and we would expect that it will continue. And then just say, if, say, the first year is going to be 10 million of revenue, the next year, if 5% is your market growth, then the next year is going to be 10 million times 1.05. The year after is going to be 1.05 squared times 10 million. Well, I think you got it. What's your break-even point? Absolutely crucial to know. If you don't know what's your break-even point, investors will not talk to you. Banks will not give you the mortgage or any loan. So you have to be able to calculate your break-even point. The payback period is amount of time, you can measure it in years or months, that is needed to pay back your capital expenditure. Now, let's say that you have, at the very beginning, if you do remember, you said that these are my capital expenditures, I need 20 million, for instance. And then how long does it take you to pay back this 20 million? Now, how do you calculate the amount of money that you'll be generating over the time? It's related to the net cash flow, okay? So you have to figure out the difference between net flow, inflow and outflow, which is equal to net cash flow. And then you're going to say, okay, every single month I'm going to generate, let's say, 1 million net in cash. That means that you need 20 months to pay back. I'm sure it needs to be clear now. So you have to figure out, I think this is the trickiest point, you have to figure out your net cash flow, and only then you'll be able to calculate your payback period. Income statement. I'm sure you can do that. Just follow a template that we've given you during the lectures. You can refer to the textbook as well. The realistic scenario, the worst scenario, and the best case scenario on your forecasted sales. Now, you may say, how do we know that? Well, guys, in this case, this is a very minor part. We won't judge you strongly, okay? So if it makes sense, then if you can justify why do you think this is a realistic scenario, or why do you think this could be the best case scenario, or why do you think this could be the worst scenario, it's okay. So here, the idea is for you to exercise these three kind of scenarios which are so widely used in business. Now, and the last but not the least is external environment. So get acquainted with corporate social responsibility, or you don't have to use both. If you can use one, fine. If you can use both, even better. For your particular case, can you make use of these concepts? And please describe them and give some details. Okay, details are very important. The business model canvas. So go through the last Google Forms. So this is the 11th topic. There is the whole video dedicated to describe the business model canvas. So make sure that you do Canvas and it's neat and clear. Can you please make sure that it's readable, because it's challenging to read something that is not quite readable, and lay that out. Okay. Good. That's it.